Happy Friday, everybody. Welcome to Happy Hour. I'm Rebecca Gomez.
And I am Cody Willard, and after dinner with Justin and OC, I am officially on the Giants bandwagon.
We converted him, folks. Can you believe that? You're rooting for the Packers before we sat down to dinner and really got to know these guys. Great guys, OC Umenyiora and Justin Tuck. Of course, they're with the Giants, and they face the Green Bay Packers this Sunday.
And absolutely, they're very cool guys. And that's, you know, as I mentioned last week, I like to cheer for individuals, and now I got two guys on the team to cheer for.
Yeah, we were looking for Justin Tuck's jersey, but we couldn't find it. So, Umenyiora, we're rooting for you.
And Justin, too. His jersey will be out next year. You know he had to break out year this year.
Yeah, and including some moolah. Justin signing a new contract. We'll get into all of that.
That must have been where that blingy watch came from.
I know. Did you see that watch?
Nice.
Ooh, and his fiancée, Lauren, had a pretty nice one on her wrist as well.
Take care of the family.
But we're not here just to brag about the Giants. We also want to talk about the markets, and indeed, we're wrapping up a tough week for the markets. In fact, the stock market is off to its worst year on record, folks. The Dow losing 507 points for the week. Ouch. Yeah. Worries about the economy, specifically the credit crunch, the subprime mess, the housing market, and a possible recession, all still haunting us in this new year. The Dow, which was up 180 points earlier in the trading day, ended down 59 points. The Nasdaq off 7 points. The S&P in the red 8. That's 4 straight down days for the S&P this week, and the worst week for that index in 5 years. And the Fox 50 says goodbye to just 5 points. Not so bad. Well, among the big business news of the day, President Bush calling for tax cuts for individuals and businesses, specifically tax breaks. We'll get into all of that in a moment. A couple of notable stocks from today's trading. Cody will like this one. Advanced Micro Devices up 11%. This after a poor earnings report this week. Investors, however, taking a second look at that stock. Shares of Sprint Nextel dropping 25% in the trading day. Let's tackle this one. Two of your favorite companies and industries to talk about, Cody. That's why I picked them.
Thank you very much for that. Hey, which one do you want to start with?
Although they were the big newsmakers as well. AMD, we talked about their earnings report coming out this week, and it didn't look too good, but as I was reading and looking into more of what the street thought of it, they said that, hey, the specifics don't look too bad down the road for the sector in general, the microchip sector in general, and that this stock has been beaten up so much, the stock is really down low. I think we said it was off 55% in the last 3 months, so people are seeing it now as a bargain.
Right, and even down from the 30s over the last year and a half or so down to like $6, and that's what I was talking about yesterday. That, I mean, at this point, this thing is it's basically starting to be priced towards even bankruptcy. If they stave that off, and it looks like they are going to have some cash flow and maybe get things back in order over the next year or so, I think that stock could double. It's again something very high beta, and it's also dependent upon the broader economy not completely tanking. But you do have PC growth, unit sales, and that's where Intel and AMD benefit.
Yeah, and it seems like basically they're the only two in
They really
in
are.
that
Yeah, there's
market.
there's been Transmeta was another one that tried to compete a few years ago, and they just fell by the wayside.
Cat and mouse game that we like to talk about. The other thing, Sprint Nextel coming out today saying they're going to slash 4,000 jobs. They're going to close about 125 of their retail locations, which I don't see the need for any of them anyway. Basically, you know, this company is just having a hard time keeping up with AT&T and Verizon. And Cody, what I thought was particularly interesting about this company is like from the subprime mess as well. They kind of like focus on the subprime customers, low income, those with bad credit ratings.
Absolutely.
And here they're seeing a lot of defections, basically losses in this area.
Right, and it's always been a big concern for Wall Street. Before Sprint, it was really Nextel that was going into that route, and once they combined, Sprint really got aggressive in it. And yeah, that's been problematic for Sprint. And, I mean, it's not something that's going to turn around. I don't think they're even going to try and turn it around. Their biggest initiative, and the thing that's probably going to have to save this company, is the WiMAX move that they're starting over the next year or so. Again, that's not going to be anything soon. And I was, by the way, I should note, I was dead wrong talking about this stock probably about a month ago, and I said it probably at $2 or $3 downside. And that is actually a great point that everyone should be paying attention to, is that, guys, markets are tough right now. And just because you think something has bottomed, when the reports come out like this, the big flip side is that you can get hit hard. 25% after the stock was already at multi-year lows.
So yeah, and as you say, even though some investors now are looking at AMD as a buy today, which bumped up its stock, hey, in a month from now could be even further near that bankruptcy.
And that's just it. I mean, really, there is so much concern right now about the cash flows of these companies because capital has gone away. They don't have access to capital, so it's got to be self-funded. And that's just the question: is broader economy, is technology going to be okay? Probably will be, but it's going to be tough out there.
Well, broader economy, a lot of talk about that today with President Bush chiming in on that economic stimulus program. Let's bring in our first guest, Doug Roberts. He's from Channel Capital Research. Welcome back to the show, Doug.
Hey, Rebecca. Hey, Cody.
Nice
Good
to see you again.
Happy New Year to you both.
All right, so a lot of people talking about this, and specifically the president is saying that he does agree with having tax breaks for individuals and for businesses. And individuals, folks, they're talking about $800 that you would get a check in the mail if you're an individual tax filer and $1,600 for a family. That's just, and nothing specific has been worked out, but that's what's being bandied about. Is this going to help the economy?
It can if they can come to an agreement. I think one of the big things that leads you to believe at least they're making progress is it's no longer directly linked to extension of the Bush tax cuts from 2001. They both have an incentive to get a deal. Right now, voters are definitely angry. It's a definite concern, and with the Democrats in control of Congress, Republicans in the White House, neither party is going to be immune from voter anger unless they come up with something to deal with this problem. Whether they can get above partisan politics.
Right, and we're going to get into all the politics of it with Angela McGlowan and Dan Gerstein, but let's focus on the fiscal part of it.
Yeah, the fiscal idea itself, that somehow sending money to people, just creating money out of thin air, continuing to trash our dollar is essentially what we're talking about, because there is nothing behind the dollars that they're sending out. Where does the money come from?
Well, essentially, the money does come from the economy. In other words, what you're talking about, and really, I know you're a hard money guy, Cody, is you have to have real belief in kind of the value of even hard money and the flexibility. If you increase the risk profile, and if you go back to the 1800s when we were on a gold standard, people weren't sure whether their banks were going to be safe, whether things were going to be there.
As if we are today? I mean, that's exactly the mess we're in right now because we're on
we've had those problems before, and a perfect example of that is bank panics of the late 1800s. You know, they were disasters that had permanent, people were wiped out. Now, if you go back 20 years to the S&L crisis, which is really the only thing comparable to this, before that, we had foreign debt issues really with banks. We've been able to weather them. Some banks have gone under.
As the dollar's fallen in value by 93%.
And Doug, even beyond that, Doug, let's get back to the heart of this issue, though. Okay, so you're going to give people money to spend. Businesses will get tax breaks if they invest in new equipment. And yes, we all know the consumer 70% that's driving this economy. But how does this deal with the inherent economic problems that's causing all this? The housing market, the credit crunch, you know, people just losing their confidence about the economy, the politicians and their jobs. How does that deal with that?
I think you hit on it really with the big word confidence. Right now, that's really what we're talking about, a battle of, is really the...
But 800 more bucks, that's not going to give me that much more confidence, I tell you.
George Soros reflexivity doesn't start at 800.
Ultimately, it's going to come down to monetary issues. Fiscal stimulus is nice. Fiscal stimulus is important. One of the things they are going to have to do is enact some reforms to ensure people that it's safe to go out, and they're curing the problems. It's not going to be solved overnight.
But Doug, it always comes back to that somehow we think the government can cure these problems, that somehow there's something to fix. It's called the economic cycle. It's called a free market. It's called buyers and sellers. I still don't see what we're supposed to be worried about.
No, the only thing really is, I think Greenspan said it the best, it's really not the Fed's job, and I refer to the Fed, since that's my specialty, really is the main avenue of government, not to prevent or puncture bubbles. That's really the job of Congress and the legislative branch with regulation and laws. It's there to cushion the aftermath. And that's been a traditional role of the banks for hundreds of years, even before the Fed. If you look at the panic of 1907, which actually led to the establishment of the Federal Reserve, at that point it was the major bankers, such as robber barons J.P. Morgan, who stepped in to provide liquidity, to provide confidence.
And that's what started the dollar on the tanking, 93%. The collusion started in 1907. Thanks, Doug. Great to see you again.
Thank you.
On tap next, the biz of football. Cody and I, as we were talking about, we went to dinner with Justin Tuck and O.C. Umenyiora to this great restaurant here in New York City.
Rayo's, boy, it was good.
Rayo's, yeah, it was fantastic. And we're going to get the inside scoop on one of this weekend's big NFL games.